Let's get in a very special guest on a very special day. Mehraboon Irani, Senior Vice President at Portfolio Management Services, Centrum Broking, joins in. Mehraboon, good morning. Before anything else, wish you a Happy New Year.
Thanks, Rahul. Thanks a lot.
Sure. On this day, do you think that the markets can choose to defy what the global markets are presenting as in terms of cues for us? Or let me ask you the same question that I asked Anupam a little while back. Is the general trend heading lower from here on?
Yes, Rahul, I think what has come out in the US yesterday about the two financial firms is a clear indicator that the worst definitely is not yet over. But at the end of it, all the factors, while we could have a possibly sharply lower opening, when I'm saying sharply, it could be 0.5% to 1% lower. I personally feel, and this is what exactly what I'm stating right now, possibly I will go and reflect it in my decision making as far as our clients go. I personally feel a lower opening could provide a decent buying opportunity, especially in some of the financials, because allow me to state that what is happening in the US in terms of these two financial firms, I don't think we can ever imagine the same type of things happening in this particular country. And I have always believed one thing, that the stock markets always do a little bit of things in advance. So while what is happening in the markets right now is the lightening of positions on the futures front, which we have seen over the last few days, I think the markets are clearly reflecting the policy of not taking a decision right now. But ultimately, the end of it all, I think the lower prices, the lower valuations are reflecting what is going to happen in terms of inflation, possibly interest rates peaking out sooner rather than later, I think over the next 2 to 3 months. So as and when this actual things happen, maybe the markets will reflect also things a little bit in advance. So I personally feel that at lower levels, we could possibly have a decent buying opportunity.
Right. Mehraboon, a trick question for you. Would you buy a Fannie Mae or a Freddie Mac, considering that they are at 19-year lows, down 22%, and now, of course, Indians can look at investing abroad?
No, I don't think so. And according to what reports I am reading, it clearly is an indicator that the things are, as of now, so very bad that a government intervention over there or a government bailout seems to be the only solution as of now. And it will be difficult for these two financial institutions to raise capital. But I don't think this is going to reflect anywhere as far as India is concerned. So I think since I remember very well, Mini, you asking me this question last time, I would honestly state that give me a 2-3% lower opening as far as some of the financials go. And then I'm saying some of the financials, I'm not referring to all the financials. I feel possibly I'm going to be a buyer in some of these financials counters in India over here. Companies like Reliance Capital or an HDFC or an HDFC Bank. I think you give me a lower opening of 5% from here, and possibly I'll be a buyer at the counters.
Right. Mehraboon, let's look at some of the domestic news flow. You have, on one hand, you have the telecom news that ISP has been cleared, at least on the regulatory front. Second, you have cement companies raising prices. We touched upon both these aspects earlier, but what's your own take on the stocks correlating to these sectors?
Well, as far as telecom goes, we have been underweight on this sector for quite some time now. As far as cement thing goes, I think something interesting thing is happening, which reports suggest. I think your channel has been stating right now that Ambuja is planning to raise prices in 2 tranches over the next maybe 3 to 4 months. So I am a strong believer that basically, as far as commodities go, I think the commodity cycle has broken off. Coal prices going up, cement prices going up. Am I wrong in my assessment? Maybe not, because I personally feel that with oil having come down, with coal prices having come down, I personally feel well, I'm not going to be attracted towards any commodity stuff, maybe with the exception of steel here and there. But coming back to the cement story, if the prices really go up, I think it's something which the market absolutely has not been expecting, but the cost has gone up, coking coal prices have gone up. So maybe they will ultimately implement a hike. But will I be buying into cement stocks? I think maybe I'll wait for the September quarter numbers. If there is no further deterioration in the numbers and the profit margins of these companies, maybe I will think that the cement stock prices have possibly bottomed out.
Very quickly, Mehraboon, your take on sugar, since we're talking commodities. There were some news points that came out yesterday. Are you tracking the sector with interest, or is that an avoid too?
I think this sugar lobby absolutely is something which the government is going to play its cards really well come October or come November, when the crushing season will start, and possibly you will have some measures announced by the government, because let's not forget it's a clear-cut vote bank for the government. So on the whole, from the long-term angle, Centrum has been a little bit positive on the sugar sector. But coming back to the short-term prospects, possibly I'll wait for maybe a couple of months more, finding out as to what the government exactly wants to do with the sugar sector before taking a call as far as the short-term goes.
Right, Mehraboon, hold that thought. We need to head into a break. When we return, of course, Mehraboon stays with us. We'll also get you a check on the trading calls and how traders are approaching this market.
You're watching Dealing Room. The Nifty futures in Singapore down about 55 points, and the cues coming in from Asia after what happened in the US not looking too bright. But we have Mehraboon Irani, Senior Vice President at Centrum Broking, still with us. Mehraboon, a quick check on the IT pack, because that was the one pocket that really outperformed the markets yesterday. Today, of course, the rupee is not trading because of the bank holiday. But what's your own sense? Is there further leg room on the upside out here?
Possibly yes, Mini. From a trading angle in the short term, possibly yes, especially looking at the way the rupee moved yesterday. A 55 per se drop as far as the rupee goes was possibly a too sharp a drop, especially as far as the stock market people goes. So an Infosys or a Wipro or a Satyam or a TCS, possibly for the short term, yes. But from the long term angle, I personally feel with upside, I think at the best, most optimistic projection, if you look at an Infosys, what is going to announce in 2008-9, I personally feel the upside is capped, at least as far as investment goes, because I don't think an investor at this point of time in this market, where valuations according to me are looking quite attractive, if not very, very attractive, I don't think an investor would be looking at a 10-15% appreciation over the next 12 months, because the time for protecting your capital possibly has passed and the time for tapping opportunities has come. And from a long-term angle, I don't think at the present valuations I would be buying the frontline IT companies. But coming back to your question, one-line answer, I think there is still some more upside, especially from the trading angle in the frontline stocks.
Anupam, let's get your take on M&M and the new tractor buyouts that they've done in China. They've been on a shopping spree, first Kinetic, now this. What sense do you get?
See, the last acquisition that they'd done of Jiangling Motors a couple of years back, and which was a part of Ford, which they'd taken over, that was a pretty smaller one. You can't ignore the Chinese tractor market if you have this whole global ambition thing going on. So,
and is it a good hedge considering the pain out here in the tractor market?
See, if you look at M&M, the kind of bets they make are typically small to mid-sized ones, where they don't go the full hog of buying out somebody big. So I would say it's a reasonably hedged one. Too early to say as to what impact it can have, but obviously, this is in line with the strategy of having a presence in large markets. If you remember, I think 4-5 years back,